Net operating losses. Okay, as we said a little bit earlier, you can have a loss in your business. So let's assume that our business has been in business for a while. Our company or corporation has been in business for a while. Okay, that's going to work best here. So let's say that I have a loss this year for 2017. All right. Obviously, I can't pay taxes if I don't have any money to pay it on. Makes sense, right? Depending on what type of business I have, there are two options for me to choose from. Excuse me, I have two options to choose from. Depending on what type of business I have is which one I would choose from, okay? I have an option to either carry my loss forward for 20 years, okay? And at that point in time, what they're saying is that I can lower my tax in the future based on the amount of tax that I have now. That's one option. The other law, that's called a carry forward. The other option is called a carry back. With the carry back, I go back to the earliest 2 years, to the earliest, most recent 2 years in which I had a profit. Literally recover the income taxes that I paid. Then at this point in time, go all the way out into the future and carry that loss forward to offset it. So what I have is an income tax refund that I should receive, and I potentially have a deferred tax asset going forward. Okay, so if we look here on page 957, during the 2016, this first year operations, and this is in the first year operations, we're looking at a carry forward, and with the first year, there's nothing to go back for. Okay, so first year operations, the corporation has a $125 million loss. All right. At that point in time, I would have paid taxes on 125, which means that my taxes would have been 50 million. So what can I do with that 50 million? I can look forward to offsetting my taxes up to $50 million in the future, okay? Now, the mistake I don't want you to make is say, I could offset my taxes up to 125 million, which is the amount of the income. You see what I'm saying? That would be that would be one of the incorrect multiple choices. The key is to make sure that you have the deferred tax asset based on the amount of the asset. Excuse me. Yeah, the deferred tax asset is based on the amount of the asset, not based on the amount of income. I'm telling you, you would have at least those two choices right there. The other ones may be totally off, but do not make the mistake of accounting for the income. Same thing as you see when I carry it back. I'm carrying back to recover income taxes of 50 million. Okay, and we'll get into that in a second. Okay, the deferred tax asset. Now, as it says at the bottom, just as for all the deductible temporary differences, I have to look at those and make sure I'm going to have a potential valuation of that account periodically. Okay, please don't forget to do that. All right. Now, if we flip over here, I'm going to have a deferred tax asset example. During 2016, this company has the same deferred tax asset, and we're modifying it, the modifications that we're not going to have that in our current year. Okay, so look down here at 2016, and we see I have 40% tax rate. All right. Now, remember, I should be able to go back and recover some money, right? How much can I recover? Well, in 2015, I had a profit that resulted in me paying taxes of how much? 22 million, correct? In 2014, I had a profit which resulted in me carrying, in terms of me paying taxes of what? 7 million. So you see where it says tax payable refundable? That's my income tax receivable that I'm going to get cash back for. They're going to send that check or direct deposit to me, okay? That explains the light blue entry that says income tax refund of $20 million. Does that make sense? Okay. Now, I only recovered 29 million of that, right? How much did I not recover? I still have a loss of how much in terms of what I would have to pay in taxes. They give it to us.
29.
Well,
no, I'm sorry.
the 20 million. Because you see what happened is look over in your far right column, future deductible amounts, okay? I have $50 million worth of income that I did not recover taxes on. So I get my tax rate from there. 40% times the 50 million, I have an opportunity to recover $20 million, but I cannot go back more than 2 years, which means I can carry that tax asset benefit forward. Okay, what is that saying? In the let's say next year I have a income tax of $20 million. Well, guess how much I'm going to pay? Zero, because I have a deferred tax asset of that much amount. Let's say I had $30 million worth of income taxes to pay next year. How much can I offset that by? By the amount of the deferred tax asset, which is what? The 20 million, which means I'll only pay taxes of how much? 10. So the deferred tax asset, the probable future economic benefit that you'll receive is the benefit of lowering your tax amount. That's the equivalent to keeping cash in your pocket. Okay? And that's what you have there. And of course, your income tax benefit, in this case, you go in reverse to balance. So you have to get those first two right and then come back for the income tax benefit from the operating loss. Because both of those is a benefit. The receivable is a benefit. The deferred tax asset is a benefit. Probable future economic benefit. Those are the first 4 words of the definition. Okay? Yes.
If you choose to the carry back, do you account for it in like this year's tax return, or do you amend the last 2 tax returns to get the money back?
You go back and get that from the earliest of the 2 years. So let's say, for instance, if it's not 20, let's say 2014 you had a loss. Well, I'd have to go back to 2013 to get that and then bring it in. So I'll get the cash. So let's say it's 2016 and next year is 2017. In 2017, I'll be getting a check back. Does that kind of help you out? Okay, I'll actually literally get that money back, whether it's a check or direct deposit, whatever it may be, okay? I'll literally get that back. That's the benefit I receive. And everything else, and from 2017 forward, I have an opportunity up to $20 million to offset my future income taxes for. Okay. Now, my question is, does that actually, because I'm not that tax person, does it actually apply to all corporations or small corporations, LLCs, or?
I think, depends on the type of business.
Probably so. Okay. Probably depends on that.